Tuesday, November 12th, market analysis, Stan Ehrlich. I start out with the stock market indexes and graduate to futures and sometimes go to cycles, crypto, Bitcoin. I think I'm going to have a Bitcoin chart probably tomorrow and keep it in my entourage of charts right after the indexes and maybe other topics after my market analysis. Here we go. Well, we've been overbought for a couple, 3, 4 days in the various indexes, and frankly, all of them. So that sets up the possibility of bearish ER sell signals, which would be the overbought, custom overbought condition with my custom RSI indicator at the bottom of the screen. It is not Wells Wilder's original. I learned it from Wells himself in the 70s and 80s. And so I've customized it, updated, modernized, whatever. And a bearish engulfing, which we have had yesterday in the QQQ and the NQs. We'll get to that in a minute. And they're doing very nicely. The E-mini did not have the bearish engulfing. As a result, we don't have the signal, but we do have the overbought condition. And here we go. We've made lows lower than yesterday's lows, and now lower than the day before yesterday, Friday of last week. And we seem to be on the way down. In my opinion, that's correct. First stop on the way down, 59.25-ish, around the highs that we had in the middle of October, beginning of some support. A much more profound level of support would be at the ballpark of 57.27, and that's some significant lows recently in the last couple of months and some previous highs before that. So that's our best significant support area for this correction, but I don't think it's necessarily going to stop the correction. Now, it could. In fact, thinking about it a second time, remember November and December are typically up months. They're usually strong, and that's coming into the Santa Claus rally, which I will start to detail maybe the end of this week. That is a very specific 3 trades on the long side before Christmas, and I've got the time of day pegged and dates, and the exit technique as well at the beginning of January. For the moment, let's not get too bearish here because I don't want to go down too darn much. So I'm expecting a move down to 57.28. Probably that's going to be about it. I cannot rule out other support areas even lower. So if you are short, going to get short, or what are already, try to protect your profit. Use a trailing stop and do the best you can with it. The ER signals is 100% automated. You don't have to do anything with it unless you want to. You can if you want to. The 5-minute chart for the E-mini for this morning, excuse me, shows us breaking by a little tiny bit the low of yesterday in the middle of the night, California time, 2:30 a.m. Bounced back, didn't lead to anything. And then this morning at around 8:30, 2 hours after the regular session opening, we started making new lows again. The downside move started to accelerate until we just had a little climactic sell-off, which also broke the lows of now Friday. So now we have basically 2 full days of buyers that if they're still long, they're not liking it. And we'll see if they start to run, which is typical, and start to drive this market further south more quickly. And today, I frankly wouldn't be a darn bit surprised if we got all the way back down to 59.50. So I think we've started the downside correction, and it may take a week or two. Next, spider, same story basically. Looking for gaps to get closed. And in the case of the spider, that means you're going to be coming down to approximately, I don't know, but just somewhat below 57, 579.30-ish, down to about 575. But that's only to close a gap. You will break some support on the way down, not that big a deal, and start to bounce off some other support. But the real significant area is at 565. And that's what I'm looking for on this particular break in the next 1 or 2 weeks. Now, the spider 5-minute chart, you can see it starting to break down here pretty quickly. We did have a bearish engulfing ER sell signal yesterday in the QQQ. The higher high did occur, then the lower low, and we closed below the previous day's close, below Friday's close, and we were firstly overbought. That's it. We turn the price action red automatically. We enter the appropriate orders and go short for an ER1 overnight and an ER1 scalp. And we want to get short today or the next couple of days at a calculated level. And we did. That's the ER3 scalp and ER3 overnight, both doing pretty good at the moment. This is the QQQ. Let's look at the 5-minute chart. I'm showing you the new short yesterday, 7:05-ish a.m. and the scalp barely made a profit. Let's call it a break even or wash. So the overnight is still overnight, and we are still short, and 509.90-ish at the moment, and we are short at about 512.29, right in that ballpark. Now, today we would have sold short around here, the middle of the range of yesterday, slightly under, not quite, and we're coming up on another chart that I've got that showing to show you the NQ, and that would be turning out to be a very good day trade scalp and still in progress, probably, and a ER3 overnight as well. So we're short ER1 overnight, ER3 overnight, and at the moment, an ER3 scalp. Now, yesterday's ER3 scalp barely made anything, practically, basically broke even. Here we go. NASDAQ. Bearish engulfing yesterday, red ER sell signal at the top of the market so far, just the very beginning here. I think this signal has a decent probability in my mind of working out fairly well. Down to support at 2680 is what I'm expecting at a bare minimum, and probably a bit lower than that. We have made new historical highs, and it does look like a double top formation could develop. But why would I say that when the low between the two highs is way down here at 17,600? If that's all true and it's a double top, oh my gosh, this is very bearish. I don't expect that whatsoever. I think the market's going to come down to one of these support areas. And because this is a little more complicated on the NASDAQ futures, I'm probably going to claim a little under 20,000. Yeah, that looks quite plausible. Next, here we are. We got ER3 signal yesterday because of the bearish engulfing. And today we sold short right after the opening, 21,221.00. 3 short position entry, 3 short scalp entry, and the trailing stop for the scalp got bumped out already, and we took a profit. The position for the 3 position trade is still short at the current tick. Our stop has come down dramatically. There it is right there at the moment, and protecting a profit. So that's going to turn out profitable, highly likely. Maybe, and I could back off the stop, but I'm not in the habit of doing that. I don't like that. I don't hardly ever do that. You accelerate it if you want to, but don't go in the opposite direction. Expose yourself to less profit and greater risks. Not a good idea, usually. Next chart, YM. Overbought conditions, no bearish engulfing, unfortunately, just starting to slide off. And I am expecting a dip down to 43,553-ish, but that's probably not going to hold. My best expectation is 42,100. Next, sharp break in the YM in the last hour or two, really a good one. Breaking yesterday's low, well into the range of Friday. This little support area here under these 2 lows and across to these 2 highs over there looks highly likely to cause a bounce, and that could very well be yet today. Wouldn't be surprised. If we close below and break below this level, 43,803, it just gets a little more bearish, especially if it happens today. Next, overbought conditions in a major long-term resistance area, and the Russell is turning it down. As I expected, it's just tricky to pick the day it happens. But I think yesterday was the day, and today it's well underway. And you got the short-term 5-minute chart on the Russell. Let's go to the bond market. Now, for months now, I've been talking about this giant 2-year head and shoulder bottom. You got two shoulders on the left. There's the first one, October of 22. And then you've got March of 23 for the second shoulder. The head of the formation is always the lowest low in this pattern. And that was October of 23. But you have another shoulder here, April of 24. And around October, I was expecting a low, as I've talked about for months. So here we go. We actually have a low so far on November 6th, a little late. And is it going to hold? Today, we're threatening the lowest closing price for the move down, and we're right about there now. But what really matters to me is whether we make a lower low, and if we can close below that previous low, that would be pretty bearish. I think we could get another leg down, which wouldn't completely change my mind. This pattern has its lowest low for the first two shoulders on the first shoulder. That means it's supposed to be the lowest low on the last shoulder, which it isn't at the moment, but that really doesn't change the fact that the formation is still there. All the body parts are looking good. The neckline's there. This is extremely bullish, sorry about that. I'm predicting up to 150 approximately if it works out, and the pattern's being threatened. I got to stop around here. I don't want to see a lower low. I want to see it to turn back up again. I want to see it close above about approximately 119. That would make me feel a lot better, especially if it happens, say, this week. It's only Tuesday. 10-year notes, basically the same pattern, same situation, same timing. Everything is about the same with minor variations. And the price level, of course, is a bit different. But this is the same thing. And it looks like it is in a position to make a new low close, but not quite yet, and awfully close to making a new low. And that would be below the low we're looking at on November 6th. So is it going to bottom out or not? Next, crude. A little lower, slightly higher current tick, up 27 after a new low. Maybe this could be developing a little bullish pattern in here. I kind of doubt that. The support area is holding. You're starting to see a little bit higher highs over time, higher lows over time. But you still have that major bear trend line long term stopping rallies. So on a broader basis, we're between a rock and a hard spot, but we're closer to some sort of a low, but we're not oversold either and not in support yet. I wouldn't be surprised if it first came down to 66.50 and then maybe a little lower and get oversold at the time and then have a nice bounce. Heating oil is somewhat similar, but in order to get down to support, which is the bottom of a big broad bearish channel, that means you would probably get into oversold territory and at a bearish support line, bearish because it trends down, and support because you're trading over the line. So as the market comes down to a line that gets cheaper and cheaper over time, that bounces off of it, which is exactly the bottom of a downward slanting channel or a downward slanting wedge. Okay, slightly bearish here, looking for a little lower, test of support, see if we can bounce off support areas, trend lines, etc. Now, natural gas, minor new high for a couple of weeks, not overbought. Frankly, support basically held, although not very accurately. A gigantic bullish engulfing here. Buy signal. We got into some trades. They worked out okay. The stop was a little too tight. breaking some bear trend lines now, which probably should erase because they don't seem to be having the effect that they used to have. Oh, this trend line is way off. I apologize for that. Yeah, they change contract months, and then that makes my drawing object shift off a bit. So I'm not worried about these little green circles and stuff. So yeah, sorry about that. So it doesn't change the signals, doesn't change the ER signals at all. So up to the bear trend line looks plausible, but the other charts look bearish in energy. So juxtaposition here. What about gold, silver, platinum, copper, beans, oil, meal, corn, wheat, and cattle and hogs coming up in a moment? Well, we didn't quite have a bearish engulfing. It was awfully, awfully close, just ticks away from having a bearish engulfing red sell signal on the top of the market, super close. Got one a little bit later, worked out pretty good. Now we're oversold. We did break some support, but we have another line that we're coming close to that could hold. It used to be a bullish resistance line, which got broken September 12th, tested a little later, a week later, and off you go. Now, overbought conditions simply stopped it. One sell signal a little premature. Another one that was good, right away good. Next day dropped like a rock. So now oversold. What happens next? A little bit lower, I think, down to this line, down to a little support, maybe even down to here, which would be 25.20. Then up. Long-term trend is obviously up. Next chart. Silver, we're looking at, and that was gold. Silver, oversold already. Second time in a few days. Yellow on the RSI. Prime target for bullish engulfing, but not happening. Barely higher in the day, 0.170 a moment ago. Only if I get above yesterday's high would I get a bullish signal. The trend is bullish, not super strong bullish, but bullish. So same with gold, maybe a little lower short term and then higher. Copper or platinum, we got a sell signal on the damn high day here on October 30th. We are now all the way down to oversold. First time since the sell signal. And we're coming very close to a support area. So I'm looking for a little bit lower, getting down to 937 and maybe inside this range here, the support zone, and then bounce. But that sell signal has been, past tense, great historically. Next, at the top of the market and the copper, way back on September 30th, sell signal and an extra one on October 7th. This market is now making new lows and new low closes since those sell signals. Now, the system, if you didn't mess around with it, got out with a very nice profit a few days ago of our short, last short, and we're now flat. We're not oversold. I'm not looking for a bounce immediately. Frankly, it looks like it could drop down to the major support area. If I had made minor adjustments to my stop and slowed it down a little bit, we probably would not have gotten bumped out on the rallies and probably still short. But that's spilt milk. I made a great decision in trade. Rather, the strategy made the decision. And of course, I developed a strategy. Next, soybeans, oil meal, corn, wheat. I'm trying to make a long-term case to be bullish, and I've seen a variety of pieces of evidence that allow me to speak that way. Today, we're down pretty substantially in beans, 17 cents, but it's not really doing any damage to the longer-term opinion, and that is we made a low in August. We had a buy signal just very close to the lowest lows, worked out very nicely. Rally stopped a little short of resistance and has pulled back down a few weeks ago to about, 980-ish. We ended up with a small little double bottom. It hasn't quite finished getting to its minimum upside objective, which would be about 1060. And I still think that's possible. But we just have to stop dropping here, turn around and start to, make new high closes and turn back up. So I am still friendly, but I'd like to see more intermediate to longer term bullish pieces of evidence, higher highs, higher lows, maybe a formation or two or more. Buy signals would be nice. And I'm not yet getting all of that good stuff. So next chart. Oil, different story. Soybean oil has already made a new high for the year ever since prices on December 21st, 23. 11 months almost. We got a sell signal a few days ago after getting into overbought conditions and around some resistance areas, and we're still short from yesterday's sell signal, period. It's doing great, better than I would have expected, not complaining. First downside objective on our short position, if we can stay short, would be a test of support area. I don't really have it marked very accurately. Around 45, and we're already 45.16, and we're already 46 flat almost. So not much further. We've already got 2/3 of that in just simply one day overnight. But the big support is down around 44 to 42.60. Then we could turn up. Now, the problem with that is if you get below 44.30-ish, you're going to break this hypothetical neckline, which so far has acted perfectly. Breakout day on the upside, 30, October 31st. Rally 2 more days, follow through. Retracement back to the neckline almost exactly the low of 11.6. New highs for the rally, got a little overbought, not unusual, but we got the sell signal. So let's see if this sell signal does any damage to the bigger picture. And the bigger picture is a move up to, let's see here. Aha, 53.60-ish. Yeah, call it 53 to 54. That's good enough. And that would be a pretty decent rally considering we're at 46 at the moment. Soybean oil. Meal, on the other hand, almost the opposite. New lows since last April this year. Very close to the lowest low for a long period of time, over a couple of years, easily. Major historical support level is where we are, and it could last a little bit longer down to the downside. 288, we're 91, 92. So oversold in support, prime target for a rally, and it ain't happening. But these things turn around awful quickly sometimes. So I'm ready for a bullish engulfing. I'm ready for a buy signal. I think it's going to happen very soon. I'm not looking for much lower. We're in the area and under the conditions where it normally would turn up. Watch it very carefully. Corn, overbought, resistance stopped it on Friday. Couldn't make it up to Friday's high yesterday, basically a nothing day. Today, we got a little bit above yesterday's high, not above Friday's. The high of the resistance area stopped and now lower on the day. We could have an outside down day and a bearish engulfing very easily and very quickly. If we were to get below 426.50, and the low already has been 426.75, all it has to do is make new lows by 2 ticks, and we'll have a bearish engulfing ER sell signal for corn. And a bit of a double top, maybe. Definite resistance, and a move down pretty likely to 413 and lower, even down, I would say, to about 397. Yep. Next chart. Wheat. Now new low again, and we're staying there. We broke yesterday's low, which was already a new low since late August, and this is looking like corn. So, my bullish talk in the last couple of 3, 4, 5 weeks, just as I was talking about, hasn't developed the bigger, longer term bullish pictures I'd like to talk about if we're going to have a really good bull market. But bottoms form the way they're forming now. They got to go down. They got to test support. They got to turn around. They got to make new highs. We'll see what happens in this oversold condition. It is primed to go back up, but it's not starting. So be careful about any shorts you've got. And watch out, you might want to go long if we see some kind of activity that warrants doing so. Here we go. Cattle almost tested support yesterday, turning back up this morning. Did get slightly oversold. I like what I see. We're starting to bounce. We got a little gap to close. I talked about that, I'm sure, the last couple of days. But it's not going to stop there this time. That looks like a little bit of an exhaustion gap. I've seen much more obvious, much more profound ones. So over the longer term, we've seen higher highs since the beginning of the year, higher lows on the longer term basis since the beginning of the years. And I would not be surprised if it came all the way back up around these highs, all the way back up to 190. We'll see if it can make a new high for the whole move at this point. I think this is turning up. Miss Piggy is pretty much the same. It gapped up a week or two ago, came down, closed the gap, and made a little bit lower lows last Friday. Starting to move up yesterday and moving up a little bit more today. Nothing flamboyant, nothing particularly huge or outlandish or weird looking. I think it's on its way back to the resistance level, this bullish resistance line, and maybe break it and accelerate upwards even. I'm liking what I'm seeing here. This is looking like it's getting a little stronger, a little quicker, a little bit more parabolic, guys. Overbought conditions in the E-mini. We're bouncing pretty good right now. And let's see about the 5-minute chart. Yep. Almost getting overbought on a 5-minute. Up to the resistance. Uh-oh. Yep, that's exactly what's about to happen. I think this rally could peter out and turn down. Just a moment. Yep, I like this number. 60.13. We'll see what happens. Okay. Have a great trading day and profitable trading to you.